after this one now, I'm going to show you something. A live trade I took, or live trade I took earlier. So when it comes to forex trading, you already know what forex trading is. So this is like financial organization where buyer and seller come together. Either you buy or you sell. So instead of doing it physical, we are doing it. We are doing it digital. Click here. Okay. So let's start with the trading terms. It says every journey starts with baby steps, and these are your first ones. Learning the forex trading. All right. Sports forex trading. Forex trading is a market where the participants can speculate on currencies like Euro USD, GBP USD, European GBP. You already know these pairs. And a trader is someone who is doing the buying and selling. So I'm the trader, you are the trader. Both of us are the traders. All right. So we either buy or we sell. How do you do that? We do it by prediction. The forex market is all about prediction. It's all about prediction. So to avoid, in order to avoid losses, that's why you need the knowledge. That's why you go for the knowledge. You learn from experience. You learn from experience. You learn from mentors. You learn from people that are very good at it. So when it comes to trading, we have different types of traders. We have the investor traders. We have the swing traders. So the swing traders are the ones that put trade in the morning and they will hold the trade till the next day. So these are swing traders. They swing the trade till the next day. All right, leaving it for 24 hours or more. So we have day traders. Day traders is someone like me because I only put trade in hours or before the end of the day. I make sure that I'm out. I don't hold it for too long. But also I can decide to swing. All right, but I'm more of a day trader than a swing trader. So we have scalpers. Scalpers are those ones that you see them on TikTok, YouTube, Instagram. They live trade their trade and they take trade between minutes, 1 hour. They don't spend so much time on the trade. And these kind of traders are 99% lucky when it comes to avoiding losses, because you holding the trade, and most of the times when you put a trade, it reverses. So you holding the trade, and when it comes to your reversing, you end up getting trapped and taking those losses. But the scalper has already left the trade and taking the little profit he wants to take. You understand? So now we also have an investor. Investor are a person or an institution who wants to invest money in various financial assets. So let me use account management as an example. Big companies, they come to traders, professional traders, and tell them that, okay, see, you want to scale up this amount of money, we can we want to put it with you. We want to equip you to help us double this money. So these are investors. Companies are those kind of traders we call investors. All right. So they come and meet professional traders to scale up their equity or liquidity. You know what liquidity? Liquidity is money. So I'm just using forex term. So we have broker and associated terms. Broker, you know what's broker? Broker is, without a broker you can't trade. Okay. A broker is an institution that enables you to do the buying and selling. You can't do buying and selling without the broker. So you need broker. A broker is very necessary. All right. We have different type of broker. We have FBI, FBS, we have exness, we have hot forex, we have FSTM, and so many of them. Okay, so they enable us to do this buying and selling because we can't access the money on our own. So you need brokers to help you do that. So now you know what leverage. Leverage is an instrument that helps traders to maximize their trading power. Right. So leverage, you see it in your exness. When you're opening exness, you see leverage. You see something like 1:2, 1:2,000, 1:1,000, 1:. Okay, you have unlimited leverage. So leverage is the broker helping you to maximize your risks. Okay, so if you have open leverage, you are taking a big, you can take any type of risk you want. All right, but some brokers don't offer such opportunity because they don't want you to risk everything you have. So they help you maximize your risk. But exness offers such, they offer unlimited leverage. So it's left for you to choose the kind of broker you want. So they says um okay, swap. You already know what swap is when it comes to broker. Sometimes you leave a trade till the next day and you come back, you see a swap fee. So the swap fee is a fee that is being charged by the broker because they are watching the trade for you when you are sleeping. They are watching trade for you. So they need to collect their fee for you leaving the trade on, because normally you're not supposed to leave a trade on and sleep like that. Right? So they watch it for you, make sure that the trade is running, and expenses and all that. They take their charges because of that. So bid and ask price. You already know what's bid and ask price. Ask price is the price you get for opening a buy position. Then the bid price is the price you get for opening a sell position. Spread is the difference between the bid price and the ask price. So sometimes you see a broker, they will tell you that they offer tight spread. What do they mean? They mean that the bid price and the ask price, the space between the bid price and the ask price is very tight. That's what they mean. Then some brokers, their spread is so open, is so spacious, and these kind of brokers are not advisable to use if you want if you are the kind of trader that is taking a big risk. Okay, if you don't care about risk management, you will be needing a broker with tight spread. All right, so that will be a topic for another day. These are examples of how to use how to leverage your lot size. Okay, you have macro lot, mini lot, standard lot. You already know what they are. So you have orders, how to set limit orders. We have buy stop, buy limits, sell stop, sell limits. So when you set a buy stop, you are telling the broker to buy from a higher price. So when you set a buy limit, you are telling the broker to buy from a lower price. Hope you understand. So also, when you set a sell stop, you are telling the broker to sell from a lower price. When you set a sell limit, you are telling the broker. Hope you are with me. Are you following up?
Following you.
Am I too fast?
Yeah, I'm with you. No, I'm okay. We are okay.
Okay, good. Nice one.
Okay,
so the reason why I'm being too fast is because you already know the basis of forex trading. So I'm just rounding everything up. But when it comes to the main area, I'm going to take it gently with you. All right. So sell limit. You are telling the broker to sell from a higher price. So all these limits, I will teach you how to set them if you don't know how to set them. Then TP, you know what's TP? TP is take profit. TP means the limit order at which your position will automatically close when a specific profit is being reached. The stop loss is telling the broker to cut your losses short. It will help you to minimize your risk. So equity is the amount of money you have in your brokerage account calculated with all open positions. So equity is the whole money, both open trade, everything combined together. That's the equity. Then the balance is the actual money that you had before opening a trade. If you check your MT5, you see it. The balance, for example, if I have $40 before I open a trade, that is my balance, right? Then when I open that trade, that's when equity comes in. Equity will calculate both the losing trade and the winning trade, everything all together combined. Both my balance, both my open trade, both my losing trade, all of them. That's when equity comes in. Then the margin is the amount of money you already spent to open your position. So if you use $1 to open your position, that's your margin. Free margin, the amount you are able to use to open positions. It's calculated like that. Equity equals to margin. Then we have price action. This is main thing. in forex trading. All right, without price action, I don't think you can enjoy this forex trading. So price action is basically the movement of an asset ups and down. So we call it price action because it's what price do on the chart that made us call it price action. Just like the name in price action. So what candlestick do on the chart is what the price action is. So when it comes to price action, we have technical analysis. Technical analysis is a method to analyze the market by looking at the chart. You look for trends, patterns, resistance, and support zones, all those things, etc., etc. Those are the technical analysis. You know, the one you do by yourself. You draw those lines on the chart. Those lines you draw on the chart, the support and resistance and trend lines and all that, are the technical analysis. These are the work you do by yourself with the knowledge you have. Then the fundamental analysis is you analyzing the chart through what? Through news, through events, through so many things happening around you that you know is going to affect a country economy. All right, this is the fundamental analysis. You already know NFP, you know CPI, you know so many of them. You have so many news, but the main one is NFP. That's the biggest trading news we have. It affects the market so much that it can move the price of a pair in 1 minute. So we have the bear market. When you say a market is bearish, you already know what it is. It means the sellers are in charge. When you say a market is bullish, you are saying that buyers are in charge. So we only have two people in this market, buyers and sellers. Aside that, nobody. Buyers and sellers. So know this. Okay, long position, you opening a buy position. Short position, you opening a sell position. It's as simple as that. So when you say the market is volatile, what does it mean? It means that the market rises and falls so much in a short period of time. So you see this kind of situation when there is a news release, NFP, the candlestick, the prices of market, the candlestick will start moving so fast, up and down, so fast. So that's when these markets are volatile. All right, you can lose or make money in a short period of time. So what does it mean? It means that there's enough money being pumped at that period of time. There's enough. When you enter a trade and that your trade goes straight to TP without any wasting of time. But let's say, for instance, a trade that you know that is supposed to take 4 hours before it gets to TP, you just take 1 hour 30 minutes and get your TP. I experienced something like that this evening on volatility 10 index. I'm going to show you on the live chat after this PDF. Then we have trading patterns. We have different trading patterns. We have double top, head and shoulder, inverse. Anyone I mentioned also have the opposite of it. So let's say, for instance, double top. Double top is a trading pattern for sell. Same way we have double bottom, right? They all have opposite of it. Head and shoulder, we have inverse head and shoulder. Triple top, we have triple bottom. The blue pattern, we have M pattern. You have so many of them. Okay, all of them have their opposite. If you see the buy pattern, you also see the sell pattern. So it's all available on the charts. You have technical indicators. Like I said, I used to say this indicator that help you flip small accounts, synthetic indicator. So it's left for you to choose whichever one works for you. Some people use trading indicator to trade. Some people use price action. So when you start, you know the one that works for you and you go with it. So we also have what else do we have? What else? I think we're almost done. How to choose a good broker. Okay, it says a low spread account that the broker can provide. Okay, they have low commission fees, they have fast drawers, they offer demo accounts so you can practice. They have for him to help you if you have questions. So all these are characteristics you should check when choosing a broker. All this is very important before making a decision. So you already know, you always ask your mentor which broker can you use to trade. They know the one that works good for you, then you can go with it. What else do we have here? Same way we have regulated brokers, that's the same way we have unregulated brokers. Now these unregulated brokers are the ones that will scam you of your money. If you deposit, you can't be able to withdraw because they are not regulated. They are scammers, right? The same way we have regulated brokers, that's the same way we have so many unregulated brokers. They are all over the place. So you need to be careful when making a decision on the broker to use to trade. For now, we have exness. These are top brokers paving ways in the market. We have synthetic indices broker, which is DERIV. The top, all these are international brokers, standard brokers that you can be trusted with. All right, so I think that is it for now. What else do we have? Okay, platforms that most traders are using. You already have these platforms in your phone. You have MetaTrader 4 and MetaTrader 5. You have TradingView. You have, what else do you need? Then the site for watching the trading news when it comes to fundamental analysis, you need your forexfactory.com and investing.com. These two sites are very important when it comes to fundamental analysis. So this is it. So which are the most volatile news? Like I said before, NFP. NFP is the most volatile news. The most volatile news is NFP, the US non-POE forum. Usually it's released on the first Friday of every month. After NFP, there are news like central bank meeting, FOMC, ECB, so many of them, and CPI. Okay, but the main one is what? NFP. That's the OG of them all. So with that being said, I'm done with the basic of forex trading. Let's dive into the next one. Just hold on, let me switch the screen. Let me switch the screen for on. So this is the chart. I'm on volatility 10 index, 2 hours time frame. So if you want to switch time frame, you can click on here. You can see from 1 minute to daily time frame down to 24 hours. From 1 minute down to 24 hours, you can choose anyone you want to view the market from. So I'm currently on 2 hour time frame on volatility 10 days, and look at this. Let me show you guys something. There's a secret. All right. So from the look of things, you all know that this market is what? Bullish. Am I correct?
Yes.
This market is bullish. Yes, it's bullish. So what happens when the market is trending either bullish or bearish? What do? When it's bullish, you look for buys. When it's bearish, you look for sells. Don't gamble your money and start doing otherwise. I don't advise such. All right. So the best thing to do as a professional trader, always go for the one that is trending at that moment. Just like social media, follow the trend. You know, when a song is trending, everybody hope on those songs and starts, making engagement with it. Same applies to the forex market. When the buyers are in charge, make sure you look for buys. Okay. So this is what I did. Notice that this market has been up for a long time. If I go to the daily time frame, you are going to see how long this pair has been going up. Okay, and I've made so many opportunities. I've used so many opportunities for me to trade and make money. So this is what I did. I noticed that there was a change of break of structure here. I see it. Break of structure here, which is indicating that yes, the buyers are still in charge. All right. And also another break of structure here, also indicating that the buyers are still in charge. So what did I do? I said, okay, let me wait for it to come back to a specified zone before I'll expect a reversal or continuation to the upside. So how do you know the particular zone to buy from? How do you know particular zone to buy from? So from this rally here, this upside, I decided to use my Fibonacci tool. Very simple. Very simple. It's not hard. So from the beginning of the rally, I would drag my Fibonacci to the upside, wherever this movement stopped. I'll click on it. Then I'll zoom in. Watch. Zoom in. Zoom in. Now, the most important ratio we should look out for is 0.5. I seen it. 0.5 and what? 0.6. And from the look of things, you can see that this market came here and landed on this 0.5. And if I remove this, let me move this Fibonacci. So let's do this. This is 0.6, right? I'm just going to drag. I've already placed my rectangle tool on the 0.6. Let me move this Fibonacci so you can see what I did. So this is it. You see it already. It's already here. I didn't draw this. This thing has been here before now. All right. So you can see that this is my 0.6 level. Now, like I said before, the most important ratios are 0.5 and 0.6. Now, some traders will buy at the 0.5. This is a secret. They will buy at the 0.5, but the market will always come back at that 0.6 and use it as what? Liquidity. I get. They will use that 0.6 as liquidity, and as a professional trader, it's advisable to buy from the liquidity zone. All right. So you won't be in a messy situation. You start panicking and be like, oh, this trade is reversing back to my entry. No one wants to be in that type of situation. So to avoid such thing, always buy at the what? 0.6 ratio. And let's check what happened. I made $150 from this trade. In 1 hour 30 minutes, I made $150. You take my status, you see everything there. The screenshot is there. The proof is there. So let's check what happened. If I switch, let me switch to 1 hour. Let's see how far we've been. Okay, I seen it. Sharp, no drawdown. Why? Because I bought from the liquidity zone, which is the 0.6. It's a secret, and this market is still going to break out, just like it has been doing for the past few days. All right, it's still going to break out, just like it has been doing. So it's going to repeat the same character it has been exhibiting for the past few days. It's simple. Follow the trend. Look for look for what the trend is telling you. If it's buy, you look for buy. If it's sell, you look for sell. It's as simple as that. All right. Then I'm just showing you guys this. I'm just using Fibonacci to show you a secret. It's as simple as that. It's as simple as that. I seen it. No drawdown. No drawdown. I didn't have any drawdown on that trade. Went straight to TP, and it's still going up. So I'm still going to post the screenshot of the TP though. All right. Hope you guys are following up. Promise. Are you there?
I'm following. Yeah, I'm following. I'm with you, sir.
Okay, good. All right. We're very late for this class, so let me pause here for now. I wanted you guys to digest this little information I just provided. All right. Then next week we're going to go ahead and continue the remaining class. I told you to write down the areas you want me to emphasize on. Very important. Straight to business. No need to be rubbing shoulders. Just write it down. I don't know if you've written it down. I told you to write it down. Provide it to my DM. Alright?
I'll forward them to you.
Okay. Sharp. Alright.
But let me, okay, I will ask you on WhatsApp.
Okay.
What a question in your dream.
No problem. I'm going to reply you. So this will be the end of today's class. And next week we'll continue. Any question, send to my DM. Okay. There's a meeting I need to attend right now. Right? There's a meeting.
Good night, sir. Good night.
Alright, so see you on the next class. I'm going to drop the record so you can rewatch. I recorded this so you can rewatch the record.